Good afternoon and welcome once again to TaxCalc TV. I'm Andy North, the CMO here at TaxCalc, and I'm this special edition. We are going to be getting to grips with everyone's favourite time of year. Yes, once again, we are approaching tax season. Whether it's your first or you're a veteran of many tax seasons, you know that it's always worth being prepared. So I am joined as always, by the fount of knowledge that is Mr. Dean Shepherd, the Director of Product Compliance here at TaxCalc, and also dialed in from her office in Nottingham, we've got Linda Frier, who is a TaxCalc customer and a veteran of many tax seasons. And Linda's got many war stories that she's going to be sharing with us. So we've got a packed schedule today. We're going to be looking at some of the tax issues that are going to be affecting you and your clients this coming January. We're also going to be looking at some of the more kind of tactical issues, particularly around recruitment and resourcing, which is a challenge for many firms right now. So on top of that, we've got some great practical tips from Linda's long history in doing tax seasons. We do also have a companion guide to this. This is the Simple Step Guide to Tax Season Readiness, and we will be sending out a copy of this to everyone who is in attendance today. But if you can't wait for that, you can download it from the URL shown on the screen right now. As always, there's a little bit of housekeeping. So yes, we will be sending a copy of this session to you at the end. There is two options. We do love to get your questions. If you do have questions, please use the Q&A box. Now those questions will be seen by us, but not by everybody else. If you do want to chat amongst yourselves, then there is the chat option, but we will not see those messages. So therefore, everyone else to see and not for us. So before we get started, I do think we should talk a little bit about the announcement that was made last week. I don't know, you may have blinked and missed this, but the government did put out some messages. Dean and Linda, what was your take on what came out from Mr. Kwarteng?
Yeah, that was interesting, wasn't it? I was on Budget Watch, as I always am. Mini Budget Watch, as I always am. Here at TaxCalc, and I have to confess, I thought I had written up what was going to be in the budget the night before, and I thought I was going to come in the next day, and this is all going to be very straightforward. I've written it all, maybe a few tweaks, and there are a few more announcements than I was perhaps anticipating. And if that's a mini budget, then
well, what's the real one?
What's a budget?
Look, right, that's going to be
new government's eyes. Yeah,
quite epic.
What was your take, Linda, on the announcements?
There were certainly some things in there that we weren't expecting, along with yourself, Dean. It was very aggressive, wasn't it? Very much a tax cutting budget. And the big question is whether his tax cuts will generate the growth that he's looking for. The markets don't seem to have responded in the way that he was hoping. I think there's a lot of uncertainty amongst the small businesses as a result of everything that's happened over the last few days.
Yeah, if you haven't had a chance to read up on what was in that budget as yet, then you can go to taxcalc.com/blog, and you'll see the write-up of all the key measures that were in there. We've pulled out a few to have a little chat about with Linda today that we think are particularly pertinent. The IR35 backtrack being a key one, so the repealing of the 2017 and 2021 off-payroll working reforms. What's your thoughts on those, Linda? I know you represented a lot of contractors before those reforms came into place. Is this good news from your perspective?
I hope for the profession it's really good news, and I think it will change the market. I think it will take a little bit of time because there's been so many changes, and only just recently, let's be honest, hasn't there? I don't quite understand the reasoning for it in the way that it has been announced. I think there's a lot of questions by people that are working in contracts within IR35 at the moment that do need to be answered. and what that transition looks like in April for those that are within a contract. But you would think that as the market settles down and demand and supply by engagers is re-reviewed, hopefully it will open up and make the contracting market more competitive. Fingers crossed, we're all opening up those small SME contracting limited companies again.
Yeah, and a couple of key points there. Obviously, those rules aren't being repealed until April, so they're not coming into immediate effect. So there is a bit of time for people to prepare and for people to think about the contracts that they're currently in and what they want to do from April. And I think that's an important point not to miss. So another measure that was announced, and I think this was widely touted in advance, and that's that the increase or the planned increase in corporation tax to 25% from next year has also been squashed. So that's not going to go ahead. It's going to remain at 19%. And from a technology perspective, I quite support that measure. I wasn't particularly looking forward to doing all those marginal calculations for those between 50,000, 250,000, I think, working out those rates. What's your take on that one, Linda?
I completely agree from a management information point of view and keeping clients updated as to where they are. I think the whole industry is thrilled that it is just back at the 19%, and long may that continue. It's very much a low rate in comparison to the rest of the G7, isn't it? Yeah.
But I think the biggest announcement that went out is the national insurance announcement. So the U-turn on the increase of national insurance, reverting back to what it was, the scrapping of the health and social care levy. Now, I think because the government wanted to put money back in people's pockets to see them through the winter and the energy crisis, that's a change that's going to come in pretty quickly from November. So I certainly don't envy those software providers working in the payroll game that have now got to backtrack out all those changes that they put in this year. And it also leaves us with some strange annualised rates of national insurance this year. So for those people that pay national insurance on an annual basis, so directors of companies, self-employed, of course, so that they don't or aren't advantaged, they still need to suffer that short period of time where the national insurance rates have been higher. There is new annualised rates, 14.53% Class 1, Class 1A, Class 1B, and 9.73% and 2.73% for Class 4 national insurance for 1 year only. So certainly our developers will have some fun coding that into our software. Was that a sensible measure from your perspective, Linda? Do you support it having been done mid-tax year rather than end of tax year?
You could completely understand what he was trying to achieve, just as you've said there, Dean. I think looking at the figures, they're estimating that the small business will save £4,200 on average from that change. That's a significant amount of money to the small business right now, isn't it? I'm hoping all of the payroll suppliers are busy making those changes because, it is important to get that money back in people's pockets with the cost of living crises. And I think people will be expecting that, won't they?
Yeah, I think you made an important point earlier about the that although those are coming into force from November, the corresponding changes in the rate of dividend tax aren't coming in until April, which presents some planning points to consider when talking to clients about when to declare dividends and if they've got the flexibility to decide when they withdraw money from their companies.
We do have a question on that, actually, and I'm not sure that we're going to be capable of answering this specifically, but Derek says, why is the 1.25% on dividend tax not being reduced until the 6th of April, while the NIC is being reduced from November? What is the rationale? We can only speculate on that. We're obviously not equipped to answer that. I don't know if you've got any speculation on that.
I mean, from my perspective, I think it was probably because no one particularly likes to make changes mid-tax year because of the complications that creates for people. I understand the rationale for doing it with national insurance because they want to put money back in people's pockets. They probably didn't feel it was quite so important to do the same for those extracting money as dividends. So kept that to a end of tax year.
In a rare calculation of risk and reward. Okay, I don't want to get too deep into this because we've got a lot to be getting through. So let's crack on. Before we start getting into the tax season tax issues, we just got a little poll for you, and we'd like to know how many tax seasons that you have been through. So, Dean, if you can put that live.
Yes, I'm going to publish that poll. Hopefully you can see that pop up on your screens. If it hasn't popped up, then you do have a little console to the right of your browser window next to the questions and chat called polls. Just click on there and hopefully you'll see that poll now. And a simple one, how many tax seasons have you survived? So whether it's been in your own practice or working in other practices, how many tax seasons have you been through? So we can get a feel for who we've got online today. So I'm wondering whether we've got any for whom this will be the first experience of a tax season. That's quite something to look forward to. 1 to 10 years. Probably a bit unfair to refer to people who've been through 10 tax seasons as still a little wet behind the ears, Andy. But
I think probably, yes.
But we'll see how many seasoned veterans and anyone that's been here 25 tax years or more and still remembers the prior year basis. I still remember the prior year basis, but my career started right at the cusp of self-assessment in 96-7, so I didn't really have a great deal to do with prior year basis. What about yourself, Linda? Where would you fall in that split?
Well, I commenced in 1996, so I was right on that cusp as well with you. So I know I don't look old enough, but this is year 25 for me.
Wow. Okay, so once you've submitted your answer, you should see the results. I think we've got a fairly even split. We've got one person who's bright-eyed and bushy-tailed. Is that you, Andy?
That'll be my first tax season this year, yeah.
Fabulous. But otherwise, a good split. Good split of experiences.
Good split. So welcome, everyone. Let's get started. So we're going to look at some of the topical issues, as we promised. The first one on the docket is the working from home tax relief. So, Dean, do you want to just run through what exactly is being changed, what exactly we need to consider, and what the issues are?
Yeah, so this one's really just a reminder that the sort of additional working from home tax relief for employees that the government brought in to recognise the fact that lots of people through the pandemic were working from home and incurring additional costs as a result. So you're able to claim £6 per week as an employee. That relief continues through 2021-22, so the tax returns that you were doing for your clients now. So if they are employed and at any point during the year they worked from home and incurred additional costs from doing so, then you can claim the full £6 per week flat rate. You don't have to prorate it at all. So, if they only worked from home 1 day a week, you don't have to make any proration. They can claim the full £6 per week allowance. And maybe just one point that is only for 21-22, and we revert back to the normal rules for 22-23 onward. So as Linda mentioned to me earlier, good idea to watch out for those PAYE coding notices if employed clients are making those claims, to check that they aren't being carried through coding notices for next year if they're not able to make a similar claim next year.
Okay, and there was some use of home issues that Linda, you were going to have some comments on, I think.
I just wanted to raise with regards to the self-employed. So just always remember there's a couple of options for the self-employed when we're looking at self-assessment information. So we can still use the simplified expenses option where they're working for 25 hours or more a month from home. So you can use the flat rate per month rates for that. Or obviously we can go on to calculate a proportion of actual costs, which may obviously look to include the light, heat and power expenses. Obviously a topical issue at the moment, household insurance. But then always remember that you can take 100% of costs where they're wholly and exclusively business related. So, if they're taking out business insurance on a separate policy, then that doesn't need to be apportioned as part of that use of home calculation. If you're running a separate business telephone line from home, or if a client's willing to go through and itemize their telephone calls from their home line, then they are all deductible expenses to look to decrease those profits. I think in terms of directors, we all need to always, recollect and make sure that, we're taking a route where potentially we're charging a rent to the company for the occupation of a property. So taking that and putting it onto the land and property section of the director's personal tax return. Of course, if the rent that is charged is the same as the proportion of those costs, then the income will offset the costs and there'll be no rental profit as such to declare. But putting in that rental agreement and keeping that as evidence, making sure it's board meted or there's a declaration for sole directors, I think is really important to put that paperwork in place. Obviously, with rental income having no national insurance on it, it is an effective way of withdrawing money from the business, and a good tax planning point to be discussing with the limited company business owners when we are looking at use of home.
Yeah, that's a really good point, Linda. And I know, Andy, you're going to hate the fact I'm going to bring MTD into the conversation because I just I bring it up at any given opportunity. But of course, when we're looking at the your favourite topic, Andy,
is it the 10k threshold?
It's the £10,000 threshold.
It's my favourite threshold.
Any home office agreement that you have with your own trading company, I mean, that's all property income. So if you are anywhere near the £10,000 mark with that income alone, then that will throw you over the threshold for MTD. So do factor that into your calculations. But a great point by Linda, actually, with the rising energy costs and other costs, sometimes we can fall into the trap of just rolling over those kind of calculations year on year, because we often don't ask or get provided with an update of costs from clients. But actually, if those costs are significantly increasing, then we need to find out what the latest costs are from our clients when doing those calculations. Yeah,
that's it. If you're going to start readdressing that, this year is the year to do it. So, okay, so moving on, we've got Class 4 national insurance and losses as well. So.
Yes, I mean, this was just a little point I wanted to raise because I've been guilty of not keeping as close an eye on this particular area as I should. Mainly because if you've got clients that are self-employed and have other sources of taxed income, or in previous years have had other sources of taxed income, it's very common that you will utilise those self-employed losses to get a refund of tax. But where you're getting that refund of tax, if that income source doesn't also have Class 4 national insurance associated with it, which employment wouldn't, there is the risk that you could forget that you can carry forward those losses for Class 4 purposes, even though you've already utilised them for a refund in tax. So it's not a new rule, but I think given that a lot of businesses have been going through difficult times lately, we might be dealing with more and more loss cases, and we don't want our clients missing out on the opportunity of reduced Class 4 NIC in future, even if we're obtaining them a refund of tax now. Obviously, that's not a mistake you've ever made in your practice, Linda, but I guess you must have been seeing more loss claims recently and choosing the best course of action for clients to utilise those losses.
Yes, absolutely. It's absolutely imperative as practitioners that when we are dealing with losses, we are taking all options and considering and asking clients for predictions for the current year as well as to whether it is actually better to carry forward those losses. And certainly if they're going into higher rate tax. So it's a really key tax planning point where we can be helping the client, but putting them in the best position, not only for this year, but the years going forward as well.
We're through the national insurance and we're now on to in-year CGT reporting. Now that's there's new dates that we need to be taking account of.
Yes, and again, not new. So it's a year ago, the 30-day period of time in which you need to report residential disposals for CGT purposes was extended to 60 days. And Linda, you said that was welcome news for you because it's often 30-day turnaround time, even if clients actually let you know they've sold their property was quite tight. So how have you found the in-year reporting of CGT?
I think it's a complicated process and we very much welcome the 60-day change. It was very much needed to have to go through and put agent authority in place for the capital gains tax. Just added complexity. Communications from solicitors, conveyancing solicitors, wasn't always there in the first instance. I do think it's improved. So I think there's been 2 or 3 reasons why that is now more manageable by the practitioner. But very welcome to see that because we weren't always managing to hit that 30-day deadline, unfortunately.
Yeah, and lots of customers have reported to us issues where they've perhaps overestimated the amount of CGT due in year because obviously they didn't have the full picture for the whole year, and they're left in a situation where a repayment is due when they've come to file the tax return, but they can't get the repayment through the normal method of filing the tax return. They have to make a separate claim to HMRC for a refund of the overpaid CGT. Have you had to experience that with any of your clients?
Yes, we do have an example of that. I think where we have all struggled as practitioners, completely understandably, is where we've got mixed 18 and 28%, where you're relying on other income coming through. When the individual taxpayer isn't in necessarily a salaried employment, so they've got self-employed income, so we're predicting profits, or rental income, where we're predicting, so many factors, depending on where in the tax year that disposal is made. There's obviously a lot of assumptions that are being made as to the amount of capital gains tax that's due. So yes, it's not a fun or calculation.
So, okay, so we're now on to some changes to the time to pay arrangements for self-assessment. So it's probably better, Dean, you go through this, and there is a phone number that we can potentially call to make some inquiries on. But what are the changes?
Well, there is a self-serve option for time to pay arrangements with HMRC, so you can go online, or at least your client can go online, providing that the liability is £30,000 or less, and you're within 60 days of the payment due date, and provided that they're willing to agree to repay that debt over a period of 12 months or less, then they can self-serve that through HMRC's website to give themselves longer to settle that tax liability if they're in difficulties. If the liability is greater than £30,000 or your client wishes to spread that over a longer period of time, then they will have to phone HMRC on the self-assessment payment helpline, which is on your screens there, 0300 200 3822. And I believe you've had some success with that quite recently. Is that right, Linda?
Yes, we have had a client with a significant self-assessment liability, £150,000 plus, that he wasn't able to pay due to where that impacted upon him with the COVID. So he has managed to extend his payment terms to 24 months. It has meant quite a lot of information being passed to HMRC, which we've supported that client to be able to provide. So I think as practitioners, we need to ensure that when we are referring the client through to HMRC, either using the online facility or asking them to make a telephone call, that we are assisting them with a schedule of information that HMRC will be asking for. And just another tip that one of my colleagues gave me when we were talking about this morning is that if you've been to Citizens Advice, if the client's been to Citizens Advice and they've been provided with a standard financial statement that they've worked through with Citizens Advice, HMRC are accepting this as evidence of what you earn and spend each month. And that does seem to have assisted a client recently as well. So if you have got clients that you do signpost to Citizens Advice, that document really is really positive and helpful within this process.
So what information requests did you see that were particularly surprising or challenging?
Nothing particularly challenging, but as practitioners, we shouldn't be giving them a telephone number when they tell us that they can't pay their tax return liability. So they're often asked how much they earn, what you spend, including bills and entertainment each month. But then they'll also start asking about savings and investments, because after all, HMRC will expect you to reduce your debt as much as possible by realising those savings and assets that you do have. So I do think that quite often clients ring up expecting HMRC to say that it will be okay, just because they've made the call. And I think you need to make sure that they are fully prepped for that discussion with HMRC.
Right. So they may dive very deep into your background and indeed your savings account. Okay, so the next thing we wanted to talk about was the thorny issue of crypto assets and how HMRC view them. I still find this absolutely baffling part of HMRC's, well, I wouldn't say guidance, because there isn't a great deal of it, but we have addressed this in the past, or tried to, and it is a tough one. But what do we know, Dean? What have we got to go on?
I mean, this will be a very short section if we're telling everything we know
on
crypto assets. I don't think any of us were looking forward to this section. There's been some new guidance issued by HMRC around the area of decentralised finance, or DeFi, for lending and borrowing of crypto assets. If you've got clients who are involved in that type of thing, then do check out what HMRC's current stance is on this. I think the bigger issue really around anything to do with crypto assets is that there isn't any specific legislation to cover those types of assets, and HMRC, just as tax advisors and accountants are trying to apply existing rules to those type of asset classes, which that guidance will evolve, and the terminology in the area of crypto assets evolves. So really it's quite a difficult one. Personally, I was never a great relier on HMRC's guidance unless I wanted to use it in my favour. I would always revert to the legislation. But there isn't specific legislation, so it does leave people in a bit of limbo. I think probably the key point is that you can't bury your head in the sand over this. You need to understand which of your clients are doing things with crypto assets, so that if you don't have the knowledge to support that, you can bring that in to ensure that your clients aren't left in limbo. Is that how you're treating the situation, Linda?
Yes, absolutely. At present, without legislation to rely on, as a small practitioner, we have to be so careful as to what we are advising. So we have been contacted by two different potential clients over the last year, and they were either crypto trading, or one particular client had started a business where he was only paid in cryptocurrency. And I didn't feel comfortable to deal with either of those. We're all getting a little bit more familiar familiar with terminology from our reading and our CPD, but when we are talking about significant amounts of money and we have nothing to rely on and no working experience, then it's definitely one where we have referred to experts, and we did pass those clients on to a different firm instead. I think we should just be very wary, but at the same time, it's something that we do need to keep pushing forward with as the profession, because more clients will look at this option and this route, and we don't want to be losing clients as a result of not updating and maintaining our knowledge in a relatively new area was all.
So that was 2 last year, was it?
This current year, yes, Andy.
And do you think that's going to increase? I mean, are you expecting that to?
Yes, I think we are. I think we're all expecting it, to become something that people talk to us about more and more.
Yeah, it's certainly something that we do get asked a lot of questions, and unfortunately it can be quite difficult to provide the answers to. So before we get too much further on, there's a couple of questions and comments that I'd like to quickly get to. We've got Neil asks, capital gains tax reporting. Have any of the accountancy bodies, do we know, made representation to the Law Society to encourage the solicitors to flag it up to their clients when they're going through property, etc., property disposal? Do we know if the...
That's a very good question, Andy. I mean, my gut instinct is... possibly not, but I do know that we do have some representatives from accountancy bodies on this very webinar. So if they haven't as yet, then well done, Neil, for raising that point.
Well,
and
Neil.
I'm sure if they have been, we shall be hearing from them shortly with what they have been doing on that measure. But it is a really good point that I think a lot of things could go a lot more smoothly if there was kind of closer relations between the legal profession and the accounting profession, particularly when it comes to property.
Absolutely. Okay, so let's move on. And the jointly held investments is the final tax issue on the docket today. So this is jointly held investments between spouses with unequal shares. What's the issue?
I always think this is good tax exam fodder, this one, Andy. This is the type of thing that, as a trainee tax advisor, I got very excited about. I thought, we can do lots of wonderful things in terms of sharing income between spouses and partners, and how we can make best use of their tax bands. And it's worth being aware of some key points. So the default position, if you jointly own assets, income-bearing assets between you and your spouse or partner, then irrespective of your beneficial interest in those assets, default position is that income is split 50-50 between you. But of course, if you're paying tax at different marginal rates, then it can be beneficial to make an election to be taxed on the basis of your beneficial ownership. So, for example, if you've got one spouse that's paying tax at lower rates, then is it possible to give that person a 75%, 90% share in the asset, make the election on Form 17 to be taxed on that basis, so that more of the income is diverted to the lower tax rate? I think there are a lot of scenarios where it's beneficial to do so, and whether clients choose to go for it or not, you should certainly be making clients aware that it is an option. Something that sometimes gets missed is that you can't just rescind that claim that you've made. It's not one of those elections that you can choose to do it and then write a letter to HMRC and say we no longer wish to split it on the basis of beneficial interest. The only thing that will rescind that is the death of either party.
Tends to do that, doesn't it?
It's a little bit extreme. Yeah. Separation, divorce, or a change in the ownership. So realistically, if you go down that path, but then wish to rescind it, then really the only way of doing so is changing the beneficial ownership again a little bit later,
or dying
down the line, or divorce might be the better option.
So what you're saying is, just so I'm clear, if you apportion more income to the lower tax band, but then their income changes and goes up, you can't change that.
Correct, unless you change the beneficial ownership of the underlying asset. But usually to do that, you'll need a declaration of trust. That usually means bringing in solicitors to draw up the paperwork. You do have to consider stamp duty. You do have to consider what the CGT position is on future disposal of that property. So it's not uncommon, even if you do that, to then change the ownership prior to onward sale of that asset, because the CGT position may be different to the income tax position. Is that something you've been heavily involved in, Linda, with any of your clients?
Yes, we work with quite a number of property clients, so the Form 17 splitting the property is something that we look at quite frequently. I think it certainly gets interesting though when the client looks to dispose of a property, and then we want to utilise 2 rate bands for capital gains tax, don't we? So always very wary of that process, and looking at things pre-instruction of solicitors and getting too far down the line. But it's certainly something that with our property clients we look at and utilise the marginal rates of tax differences as often as we possibly can. But then see what we can do from a capital gains point of view for the disposal too. So one very much to work closely with clients with to save tax, let's be honest.
Wonderful. Well, thank you very much, team, for that. They were the priorities that we wanted to get through from a tax perspective. But there are some other issues around tax season that I think are going to be bothersome. One of the possibly the most common, certainly this year and for the last couple of years, I think the biggest challenge has been around capacity and about resourcing. Linda, tell me about your firm. Are you fully staffed up going into this tax season?
No, sadly we're not. We're a woman down. So we have been looking at what we can do and what changes that we can make, because it's feeling very much like in September we are going to go through this season a person down, most definitely. So we've been looking to upskill more junior members of staff to do some more detailed analytical work and compliance work for us to support us. We've been making sure that we've reviewed our processes and taken, every piece of software that TaxCalc can give us to help from a collation of information point of view. But it's a tough time for recruitment in the accountancy practice profession, that's for sure.
Yes, I was speaking to a number of recruiters who shared exactly that, and 3 to 6 months to find an accountant was an average, and certainly on the outside of that was where we are. How long have you been out of hands and looking for people?
This is month 4 for us.
Month 4, so coming to the outside of that, and how's it been? What have you found some candidates, or they've just not stayed around, or what?
It's been a highly competitive recruitment process, that's for sure. It's not something that I've experienced ever in the profession. That people that we've interviewed have spent very much the day going from interview to interview. We have made offers to candidates, and they have obviously felt that there's a fit that's better elsewhere. As a micro firm, I think it puts you at a disadvantage from what some of the larger firms in our city can be offering. And it's really important to us, me as the owner, but my team here as well, that who we do bring in is a fit and is, wanting to work with small clients. So I would much rather wait and make sure that it's the right fit for everybody. But that doesn't remove the anxiety of having a lack of resource at a real key point of the year. I'll be very honest.
Absolutely. And so we have compiled some strategies that firms have reported to us that they've been using. Notably, I mean, the obvious one, I guess, is to restrict time off and just increase the amount of overtime that milk the staff that you already have. Is that a possibility for you?
We don't allow holidays. Our employment contracts have always said that we don't have time off in December and January, other than for Christmas, as you'll hear about a little bit in a little while from me. I don't run a firm that runs overtime as such. I really believe in a work-life balance, but discussions have definitely been had this year with the team with regards to how realistic that can be, unless they want to be carrying me out of here half dead in January.
And then technology is the other option of automating. You say you've kind of automated all you can. There isn't any more to gain from that.
We believe so. We've always been a very technical firm. We've always, taken systems and kept up to date, and they've always been a heart of everything that we do in terms of our practice management system and the software that we use. So we do feel that a lot of our processes in terms of requesting information are automated. The way that we receive our information back from clients, the way we have reminders and our task lists set up. So I think we're on the forward foot already, Andy.
Yeah, you've squeezed that. So one of the other common approaches was kind of pallying up informal or formally with local firms or firms elsewhere in the country that you can just share work and share resource. Is that something that you've looked at?
I haven't approached anyone at this stage. We were in a scenario in January 2019 where we did actually help another local accountancy firm ourselves, because we were well ahead of our curve of meeting deadlines, and due to an illness of the owner of that business, unfortunately he wasn't able to manage his practice, and we parachuted in and supported that team and that practice to meet their deadlines. So I know it does work, and it can be done from experience.
Right. Yeah, that's and I see that was a common one. And then the other alternative that comes up relatively frequently is the outsourcing model, formally outsourcing, and potentially to an overseas partner. Is that something that you've done, or Dean? Did you? I think you did.
Yeah, I certainly experimented with outsourcing overseas in my practice, not necessarily to help with the rush in January, but more a case of easing the transition to taking on professional staff within my practice. So I had a small practice. We were a team of 5 when I sold that, but I often found that it was all the work kind of ebbs and flows. So just when you think we're actually starting to make some decent money in the practice, everyone's too busy, you need to employ the next member of the team, but you don't feel like you're bringing in enough to get that next A grade member of staff. So when you do, you're back down to earning less than you were, and it's just this kind of ebb and flow cycle. So right. I was trying to even that out. So yeah, I explored overseas outsourcing. I think I probably didn't do it for more than 6 months, and I probably wasn't willing to give it the commitment that it deserved. So I was always advised to treat the outsourced work as if it's been done by a semi-senior. So don't think you can just palm it off and you're going to get a beautiful set of accounts back exactly how you would do it. You need to treat that as a team of semi-seniors that will need the work reviewed, and it's also a learning process. They need to understand how you do things in your practice. I think every practitioner has their way of preparing a set of accounts, and I'm sure if you gave books and records to 10 different accountants, you'd get 10 slightly different variations of the accounts back. So it was probably more of an investment in time than I thought it would be. And I actually found I got more value from using local subcontractors. So I was lucky to find a couple of people that had recently started their own practices but didn't have enough work to keep them fully occupied. So I, as the work ebbed and flowed, I would bring them in to, get the accounts jobs done. So that worked pretty well for a while, and certainly saw me through until I was in the position that I could bring in full-time members of my team, and then from that point on, I didn't look again. But yeah, we've certainly got many customers that are big advocates of outsourcing overseas, and actually have dedicated members of the team from those organisations. So you're not just kind of throwing it into a unknown pit of work to a team.
Yeah.
You're actually allocated individuals, and they're treated like members of that practice, just remotely.
And I think one of the challenges with that is, like you say, that you might have a person who's working for 4 different firms, including yourself, and then the way of working is different across, and it must be very difficult for them to manage that. I've always understood the best use of outsourcing is if you're fundamentally kind of changing the business model of the firm as opposed to simply backfilling. But more and more, and certainly this year, I've heard of probably half a dozen firms that are just using those resources as backfill. Linda, have you got any experience with using overseas outsourcing formally?
Not formally. I've never made the time commitment to do it, and I've never had a gap for a period of time that I felt that I couldn't get a member of staff in to make that backfill. But I hear everything that Dean said. I do have a good friend who's outsourced his accountancy practice in entirety to move into more advisory work, and I think it's, it took a long period of time for that to work, but it is now working for him, most definitely.
Yeah.
Yeah, I was speaking to one of our customers recently, Andy, that took a slightly different approach that I found interesting. Because when I started my practice, I was always, basically the first person I employed was an admin assistant to take that work off my hands, to leave me to focus on the work that brought the money in. I think that's a very common approach when you're a sole practitioner. But actually, he preferred the administrative work and wanted to have a handle on that. So he was very quick to outsource all the accounts and tax prep work and keep everything else as his strength, which I think was a really interesting approach to it, not one that many people do, but certainly works for him.
Certainly works for him. Well, yeah, no, that's a new one. And then there was one other approach that we were talking about earlier, and this was, Linda, you were talking about the use of, you've been hearing about people being able to employ Ukrainian refugees.
Yes, absolutely. I picked up a couple of pieces of information with regards to that, which I understand that you've done some research on over the last couple of days. So I think it would be something very interesting to share, to see that people can add value and give back to a really dreadful situation at the moment.
Yeah, absolutely. I mean, I looked into this very briefly, and there was some concern around licensing and being able to validate whether qualifications would be suitable for use over here. And there is some crossover. There was a firm, a training firm, AAT training firm based down in Exeter as well, who pointed to the fact that you could go to local council and there'll be a refugee support group who can put you in touch with people, and they understand the qualifications that people have. So that's a potential way out in this particular time that you might be able to get some help and help out while you're doing so, which could be a very good thing to do. But if you are down a member of staff or two, it is going to be tough this year, and overtime is probably going to be even more of a premium for this year. So our poll, we would like to just ask a question around that. Dean, we've got a poll here about what strategies will you be using to handle any capacity downfall that you have this year. Can we bring that up?
Yes, I've made that live. So again, if that hasn't popped up, just click on the little polls console to the right of your screens. Multiple choice, so just give us a little indication of which of those you'll be implementing in your practice. It'll be nice to have an idea of what people on the call are doing to see them through the tax season. And you do know, Andy, it's in our contracts that we can't take time off in January either, because we need to be fully staffed to support our customers.
I do know this, yeah, absolutely. Even Christmas Day, I think, is off, yeah. We're in.
That's true. Yeah, interesting. We'll just let that roll and see what strategies people are going for. But yeah, early indications, lots of people just see January as another month, Andy.
Yeah,
it's all in hand.
Another month.
Stress.
No stress. And then, but yeah, and Linda, you did mention before actually that you've been using temporary staff, or you've tried that, and that worked quite well, I believe.
Yes, most definitely. I think you need to find the right position within your business, and you need to make sure that you've got your processes documented. As Dean was saying, give a different set of accounts to a different accountant, and it will be prepared in a slightly different way, won't it? But temporary staff definitely does work to see you through the season if you need to. But you do just need to think about what tasks it is that you're going to set that person and how you're going to allocate them, and make sure it doesn't take too much management.
Absolutely. So where are we? We've come out. Yeah, most people for January is just another month. Fantastic. So we do have just time for. I did want to do a top of the pop style graphic for this, where we've got Linda's top strategies for emerging from the other side of tax season intact and in fine feta. So we unfortunately don't have the graphic unless John can whip one up very, very quickly. But Linda, what did you have for us? What were your, as a veteran and succeeder of many tax seasons, what's your advice for everybody?
Okay. Well, let me talk to you from the heart. You've all just said that January is just another month. And that's definitely, after all these years, how I'd like to think that I approached it. So I made some notes to share with you about how I run Coalesco and what I've done over the years that I think has benefited me and the team in December and January. So if I could just take 5 minutes of your time to share those with you, then you can see if they apply to your practice or if there's any snippets there that help you. I certainly don't run my business to look for a badge of honour that I come to work for 100-hour weeks during the month of January. I'm so simple girl. I want to do my job, do it well, go home, see my friends and make my gym classes. And I would always say to you that you need to think about what you will accept in your practice and your business. Remember what your values are, why you set up and what you're trying to achieve personally. I use every touch point with clients and encourage my team to do so, to request information from them relating to their tax return. And we can all see on our practice management system what self-assessment tax returns are outstanding. So very much from September each year, when we make contact with a client, or a client, for example, rings us with a query, we remind them about their self-assessment tax return and the deadline and the information that we require from them. We send out a monthly client newsletter with information, or ad hoc newsletters relating to the mini budget, as an example. And we have a countdown clock on it, but that countdown clock is to our internal deadline. So we request information from our clients regularly, and I don't think we should be embarrassed to do that. We give real life examples of horror stories and good stories as to why a client should be preparing their self-assessment tax return earlier, and why they should know their payment. And we keep updating those stories with real life things that are happening at Coalesco. Certainly with SEISS as an example, some people had bills that they've never seen before, or other people had losses and were scared of bills that actually didn't exist. We tend not to complete limited company accounts in isolation to self-assessment throughout the year. We look at the entity and the shareholders and their family members as one, and we work to encourage one sign-off with our clients. What this means is that clients have got into that routine of when they bring their limited company accounts with them, they also provide us with the information to complete their self-assessment tax return. We set our internal deadline for the receipt of information each year to the 31st of October. That goes out in our initial service proposal to our clients. So this communication is there in black and white from day one, and that's how our relationship starts. It then goes into our service level agreement that we put in place with each of our clients. It does mean that those clients that we work with that are professional and understand deadlines in their day-to-day life adhere to them in our experience. We look to complete all of our year-end accounts that are due on the 31st of December and the 31st of January by the 31st of October each year. All this aims to do is to remove the pressures of having those two additional deadlines during the 2 months of trying to complete self-assessment tax returns. In the month of November, we actually make a telephone call to every client who's failed to deliver their information to us by our internal deadline of the 31st of October. In our experience, this works out to about 12 calls per day, and 2 of us make those calls. They're not long calls, and we time block that time in our diaries for that month. And this is where our relationship tends to get a little bit more personal with our clients, because we're looking to understand why they haven't delivered that information to us. Sometimes, let's be honest, the client's just waiting for the prompt. They're waiting for that voice. And that does mean that we get the information from them that we need. If they agree on that telephone call to a date to deliver that information to us, we task list that date for follow-up if they don't adhere to that deadline as well. So all the time we're building that relationship with the client and understanding. Of course, we get the excuses just like everybody else does as to why people can't meet deadlines. And if there's personal reasons, if there's illness in the family as an example, then we do agree to those extensions. We're human. We want to work with those clients, don't we? But it means that we can start to understand what resources we will be needing for January and those people that are going to be delivering that information to us later. If somebody says that they're missing a couple of pieces of information, then we look to understand what those pieces of information are. So much is available to us nowadays, such as, I don't know, state pension information. So something that they're waiting on could mean that we could actually complete their tax return or complete 80% of it. None of us like to pick up a job and put it down. I appreciate that completely. But over the years, we've done things as build relationships with people's IFAs so we can get their investment information directly from them. We've also used over the last 2 years with those scary words of MTD, that telephone call, certainly with our sole trader clients, to start talking about software where they're saying, oh, everything's just still in a carrier bag. So we are looking all the time during those calls to see what we can do to help in future years. We all have tricky clients. I could probably write you a list of my predicted 10 lost clients, and they'll be the same. 7 of them will probably be the same as they were back in the 2008 tax season. Some people we just don't win with, but why do we have a battle with them? Sometimes it's personal, but over the years, I've been quite open and honest, and I've explained to people that I'm human. And I do reason with people, and I quite often get a positive response by being open. And in January, nobody gets the best from me. I become a little bit of a robot, and seeing me in January means that you're just getting a compliance job from me. But I'm careful with my sign-off meetings and my time in January. And if clients start to discuss their business and growth plans and tax planning points, I do cut those meetings off and arrange those and schedule those for February to make sure I've got more time to continue with the compliance work. don't take all the pressure on yourself, and make sure that you're communicating with your staff as to how things are going. From the first week of October, we have a weekly meeting internally, and we look at what numbers are outstanding. We compare that with year on year, and we look to understand what we need to sign off in the week that's coming to keep on track or push on. I've very much created a culture where everybody is in this together. I don't feel it's just my responsibility, and I don't think you should either. There are other deadlines that matter during December and January, payroll, VAT. These clients are compliant and they're doing exactly what you ask them to do. So don't treat them poorly during that period. Remember about your customer service. And it's not their fault that we're busy because of other people not completing their self-assessment tax return. So make sure that the team have always got time to be delivering through their diaries, things that we're, responsible for doing for clients. By way of new client inquiries that we receive in January, leopards don't change their spots in my experience. Some people just work to deadline, and they will always be the client that walks through the door on the 29th of January, complains about their fee, maybe doesn't pay us. And if we take them on the 29th of January, the likelihood of them coming back to us the next year is sometimes quite slim, to be honest. But do follow up client leads that come through to you in January, because a lot of people do start up or look to change accountant in January, and they've made a New Year's resolution, gone back to work with their list, and one of them is to change an accountant. So it's really important that we look at our business and that business development during January. Finally, please do take Christmas off. January feels so much better if you've had a break. Look after your mental health and your physical health. So meditate, play fantastic music in the office, go out, get fresh air, walk during your team meeting, make a client telephone call on a walk so you get fresh air. Eat well, avoid alcohol, maybe even avoid drugs, I don't know. And just wake up blessed about your business and be thankful for what you have each day. Call a friend or a family member or the Tax Calc helpline if you're really struggling. Go pet your dog, hug a tree. Our offices are near Woodlerton Park, so I go and hug a tree quite frequently. And on the 1st of February, have the day off. Make sure your team have a break as well and do something really fantastic on that day. But then when you return in February, make sure that you have a team meeting and you seek their ideas and look at things that you could do better next year, or how you could change processes or allocate your resources differently. So if it has been a weaker period, you don't go through it again. Thank you.
Wow, thank you very much for that, Linda. Wise words. I really do wish that I had invested in putting a top 10 graphic, Fluff Freeman style.
I think that was more of a top 20 there.
Top 20, I think, yeah.
Hear lots of collective scribbling as everyone's writing down those suggestions. Yeah, fabulous stuff.
Absolutely. Well, look, thank you very much for joining us, and thank you very much, Dean. Thank you very much, Linda, for sharing all of that useful knowledge. We all at Tax Calc wish you the very best of luck as we head towards January, and also I want to reiterate that we will be sending the companion guide out to you when we send the revised recording of this, but you can download it from this link. A number of people were asking for that in the chat. And speaking of the chat, I did want to congratulate Robert for his 53 years, 53 tax seasons. Well done, Sir Robert Campbell, in the chat. Congratulations to you. So, Dean and I will be back in just a couple of weeks' time, on the 19th of October, to be specific, and we're going to be tackling the very, very much awaited issue of technology for MTD. We're going to have a couple of special guests to really talk about not just the digital record keeping that I know does get everyone very exercised, but very much everything from quarterly submissions to doing the EOPs, the finalisations, and even to managing your deadlines and the client communications. We're going to be looking at all of that in a specially extended version version of TaxCalc TV. Very much looking forward to that and hoping that you will join us. In the meantime, I wish you the very, very best, and we will see you in a couple of weeks' time. Thank you.